a chairman and managing director at iCapital, an investment management firm based in Nepal, and also the president of Nepalese Young Entrepreneurs Forum. I would like to thank organizers of Nepal Investment Summit 2019 for giving Nepalese Young Entrepreneurs Forum an opportunity to conduct a session related to investment and youth entrepreneurship. Today, we have 4 distinguished panelists who are very much involved in venture capital and private equity investing locally as well as globally. We are very glad to have them here with us this evening. Throughout the discussion, we'll be touching upon the past, present, and future of venture capital and private equity environment in Nepal. We want to give audience a vibe of what's happening in this space. All the venture capital and private equity space is at a very nascent stage. We'd like to highlight its potential in a country like Nepal. We'll also be hearing experiences of panelists as an investor and private equity professionals. We'll also be touching upon the youth entrepreneurship side from the perspective of investment. By the end of this session, we expect audience to understand the current scenario and what future holds in this space for domestic as well as foreign investors. We'll also be taking a few questions in the end if time permits. I would like to I'll try my best to keep this session within 1 hour and try to end it by 6:40. So without further ado, I would like to invite our panelists on stage. First we have Mr. Suman Joshi, founder and managing partner, True North Associates. So he has intimate knowledge of commercial banking and investment banking, having started his career in the sector in 1990. He held various senior positions with ANG, Greenlees, and Standard Chartered Bank in India and Nepal for more than a decade. He moved on to become the founding CEO of Lakshmi Bank, where he completed 3 consecutive tenures during which he conceived, managed, and scaled various projects and subsidiaries for the bank. He is widely regarded as one of the most innovative and creative banking experts in Nepal. He received his education on private equity and venture capital from Harvard Business School. He is constantly looking to push boundaries of existing financial and entrepreneurial landscape in Nepal. Welcome, Mr. Joshi. Next, as a panelist, we have Mr. Tim Gocha, founder and CEO, Dolma Impact Fund. He is a private equity executive with a background in renewable energy and technology. Before Dolma Impact Fund, he worked at Deloitte Corporate Finance in London, JP Morgan in New York, and energy giant E.ON. As an entrepreneur, he has started and sold 2 successful technology businesses. He is honorary professor of sustainable business at the University of Nottingham and guest lecturer at London Business School, where he gained his MBA. Welcome, Mr. Gocha. Also, we have Mr. Dipta Shah, an independent advisor, early stage investing. I'd like to invite him on stage as well. So he has over 2 decades of international experience in the private and public domains across a range of operating and investing roles. He is passionate about investing in technology, enable companies, and developing early stage ecosystems, and believes firmly in the power of technology to leapfrog traditional pathways to development. He holds a master's degree in international finance and business from Columbia University, a bachelor's degree in economics and international relations from Knox College, and an international baccalaureate from the United World College of the American West. Welcome, Mr. Shah. And our 4th panelist for today is Mr. Sambhav Siroya, CEO of Movers and Shakers Holdings. He is the CEO of Movers and Shakers Holdings. He is a passionate early stage investor who has built a portfolio of 19 companies within M&S Holdings. He brings a differentiated approach utilizing a permanent capital model to early stage investing in Nepal. He remains actively involved in the M&S portfolio post-investment and is constantly on the lookout for new investment opportunities. Sambhav's mission through M&S Holding is to help unlock Nepal's digital future through a combination of capital, knowledge, and networks. Welcome, Mr. Siroya. So we have 4 distinguished panelists here for this evening. I want to thank you all for taking your time out and being here to share your experience. Now, I'd like to start off with a question to Mr. Gosha. You have been in VC space for quite some time now, running a structured FDI-based fund in Nepal, Dolma Impact Fund. You've watched and experienced this space quite closely. Like how do you see this industry evolving in Nepal, Mr. Gosha?
So I think we started investing, does that work? Testing. We started investing almost 5 years ago. I think the main thing that's changed is the knowledge of what private equity and venture capital is, the norms of investing, the term sheets, the legal terms. That probably didn't exist very much. We were the first private equity fund coming in. So I think there's been a lot of learning from the market, from the entrepreneurs. It's almost become the norm, and that's really healthy. I think what hasn't changed much is the regulations until, of course, you know, the last week or two, and we're still waiting to see what's changed. I think competition hasn't been a strong problem for us, as in I think the market's wide open for quality products and services that we invest in. I think the biggest difficulties have been dealing with licensing, the government, foreign direct investment, getting money in, out of the country. So it remains to be seen if the recent regulation change has made a difference.
Okay, now shifting gears to Mr. Joshi. You have also had a similar experience in the space, but from a domestic, you run a domestic PE fund, do not associates with domestic investors. So how do you see industry trend going forward in VCP space?
Well, like you said right at the top, this industry is still at a nascent stage. Obviously, Tim has had a different trajectory with his international exposure, and then working with DFIs, he's been able to create a portfolio. But for the rest of the aspirational people who want to get into this space, it's actually bubbling. There's a lot of interest out there, and we spent most of our last 4 or 5 years trying to educate people as to what private equity and venture capital is about. And like Tim said, people are now beginning to slowly realize this. So the demand side is building up as well. And then with the new regulation that has just been published, it has now finally been formally recognized as a space to work in. So in the days to come, I expect a lot of movement, formal movement. And given that, our financial system is so dominated by the banking sector, this will be a refreshing welcome change for people to access capital, and I'm sure it'll only be for betterment of the entire business community.
Yeah, I'm just trying to set some foundation for the discussion here today. So just throwing some question to all the panelists. Mr. Siroya, you have invested in 19 startups, basically doing startup investing, early stage investing. And from looking at your portfolio, you've been a little aggressive as well in the past few years. So what has your experience been like with these startup investments so far?
Sure. So, we actually used to focus a lot on venture building, and it's only been recently that we've been making aggressive acquisitions and also investments. Over the past 6 years, my honest opinion on this industry has been that because of formal funds, because of permanent structure capital investment companies like ours, I think venture building, startup building has become more of a reality today. It used to be a very vague thing. Today, I think a lot of entrepreneurs see that there is an actual support system. And a lot of things are happening. What we focus more on is focusing on value injection. We have a strong corporate team, a central team that, be it venture building or scaling up companies, how we are sort of differentiated from the rest of the VCs or the investors is that we are there throughout to support these entrepreneurs, to help these entrepreneurs scale and grow. Because honestly, in a market like Nepal, where the term startup is so new, the term VCs are so new, entrepreneurs or potential entrepreneurs, they would need a lot of structure. They would need a lot of support. So that is sort of what we focus on.
Okay, Mr. Shah, you've been very active in the United States, working in the ventures capital scene there. You can kind of compare like what's happening in Nepal, and then you can compare it with the scenario in the United States. So how do you see this venture capital and private equity industry growing in Nepal?
Thank you for the question. I actually wouldn't compare our ecosystem here to the one in the United States. I think there are better comparisons to be made in developing world ecosystems. And if you take a dispassionate view of how ecosystems emerge, how they evolve, the ingredients that are required to grow these ecosystems into environments where entrepreneurship can thrive, I think Nepal is firmly footed in the right direction. Okay? There are gaps in this ecosystem, which we all well know, some on the regulatory side, some on the funding side, some on the network side, some on the knowledge side, I would claim. But by and large, what I see in Nepal is a pattern of an early stage ecosystem that's coming into shape. So I see, at least in Nepal for the next 5 to 10 years, a whole range of possibilities that can come out of this ecosystem. For investors, for entrepreneurs, for those in the ecosystem that are guided by motives to support entrepreneurship.
Okay, you've been in and out of Nepal for quite some time now. So for the next like 10, 15 years, like which sectors do you see will be very attractive for investors in Nepal?
That's a great question, and I unfortunately don't have a magic wand which will guide investors into specific sectors. But I will say this though, I mean, as a general trend, I think two macro trends globally are working in Nepal's favor. Okay, the first is you see bulge bracket PE and VC investors looking for impact-oriented investments. Nepal can tick the box for that. The second trend that I think is working in Nepal's favor is you also see more of the known quantities in the PE VC space who are looking for earlier stage investments. And the reason being is because deal flow, quality deal flow, is quite constrained globally, right? So if you combine the search to go upstream, to invest, to take higher risk by these early stage investors, or rather midstream investors, combined with the appetite that global bulge bracket entities have now for impact investing, I can't think of a better environment in South Asia than Nepal where these two forces combine. So to answer your question, I see sector-wise anything that's tech-enabled, digitally enabled as hot. And just to clarify that point a little further, when I think about IT, I don't think about it as a sector, okay? The reason being is because what we're trying to invest in, and what I think the trend is going forward, is investments in tech-enabled digital companies. And I make the distinction here because ultimately, digital economy-related investments are horizontal. They cut across sectors, right? So if I had to bet my own money on anything going forward, I would look for digitally active, tech-enabled companies in Nepal to invest in for the next 10 to 15 years.
That's very interesting. There's a lot of buzz around technology in Nepal at the moment. So just to like add on to that, Mr. Gosha, like your portfolio before was with agro, pharmaceutical, solar. But recently, we've seen that you've invested in tech-enabled companies as well. So why the sudden shift in your strategy? Like, was the specific reason behind that?
Sure. First of all, I mean, it perfectly builds on your point. I agree, tech-enabled. So we have made 3 investments in the tech space. Sasta Deal is an e-commerce platform. Cloud Factory is kind of data processing for big American clients. Fuse Machines is artificial intelligence software development. When we came to Nepal, I assumed we were going to be investing in hydros and factories, and we have done. But I think as time's gone on, we've seen the potential. In one simple sense, one of the reasons that tech is so scalable is because it doesn't require many physical licenses, right? You don't suffer from the infrastructure deficit, except perhaps bandwidth, but that's not too bad. You don't need to file a license, you don't need a PPA, you don't need a development license, etc. So actually it's very free. It's very free. But I also agree it's not one sector. So from those three companies, one of them is at risk, but its risk is potentially the retail market in Nepal. The others would be R&D companies in Silicon Valley, because they're the customers of Cloud Factory. So really it's not one risk, although we do categorize it as a sector. I also think technology just, it's impossible to stop knowledge transfer in technology, however isolated a nation. So you're seeing a lot of amazing entrepreneurs and software developers, etc., coming up here. And I think that because that knowledge is more transferable perhaps than other sectors, that it's very attractive. So we've seen our highest, it's our largest sector in terms of our capital committed to it. It's the largest in terms of employment generation in our portfolio, and I think it's got the best potential for our exits.
Okay, this is also the session on youth entrepreneurship linked, so I had to ask certain questions based on that as well. So talking about technology, like technology is linked with a lot of young minds, young entrepreneurs, and Mr. Siroya, like you have invested in a lot of young minds, young people, I should say.
Yeah.
Like when we had an informal conversation a day before, you said that your average age is somewhere in late 20s, the founders that you have invested in.
Right.
So what is your take on this new breed of young entrepreneurs in Nepal?
Mm-hmm. So like you've mentioned, I want to just put it on the record that my age is 25, and most of my co-founders, CEOs, venture leaders hover around my age. I think our youngest co-founder is probably 21, 22. Just one of our investments, one of our venture breaks that rule. We have one 48-year-old co-founder, CEO, but everybody
There's nothing
else,
wrong with being 48.
I think in Nepal, even up to 60 is youth. So I think, you know, but
Thank you.
touching on the point that, you know, about this new breed of entrepreneurship, I think a lot of it has to do with how my generation grew up, right? We talk about being accelerating or starting tech-enabled ventures, but I think my generation actually grew up, and we were tech-enabled. So one part is the upbringing, right? The other is, I think, content consumption, right? I think I'm not talking about the formal education system for certification. I'm talking about learning what you have to learn. I think the content we have access to from platforms like YouTube, Khan Academy, to just Google, anything, right? I think we have this weapon that we are using, which is enabling us, right, to make better decisions, right? Which is enabling us to be more of a learned person. So I think the reason I am surrounded with, or I think overall Nepal is surrounded with today, really young founders, really young venture leaders, is because we understand that times are changing very, very, very fast. We understand that if you're in middle school right now, if you're in, let's say, grade 5, grade 6, by the time you complete your master's, come out, even the experts, no expert knows what kind of jobs will be waiting, right? And I think this generation, my generation, this age group actually gets that, and we are depending more on the internet for education. So I think that these two reasons actually sum up why I particularly have a lot of co-founders who are very young.
So let's take this conversation a little deeper. Like the global trend is currently moving towards, you know, blockchain technology,
Right.
artificial intelligence, machine learning, and
Right.
stuff like that.
Right.
So do you think we are ready for that? Are we catching up?
Raju, I think we need to sort of understand what exactly blockchain, AI, machine learning is. So I always tell people that, you know, it's something that we don't need to understand. We all use the internet, but we don't know how the internet works. It doesn't matter for us. Technologies or concepts like blockchain, AI, machine learning, these aren't industries, right? Same way I would not say the internet is an industry. Will breakthrough innovations happen in Nepal? No, right? But can Nepal leverage these technologies, these breakthroughs, to build products on top of that, to build services on top of that? Of course, why not? Internet was not invented in Nepal, right? But all the most of the ventures we are talking about, right, are internet enabled, right? So I think, I'll take an example of blockchain, right? So was blockchain invented in Nepal? No, right? Will these technologies be invented in Nepal? No, and that's not what we're here for. But let's say there is a company that works on smart contracts for in the blockchain ecosystem. Will Nepali corporates, will Nepali banks, will Nepali companies use that? Are we ready for that? Of course, why not, right? Can we build such platforms on given technologies that already exist? Of course, why not, right? So in a way, to answer your question, in a way yes, in a way no, right? But to leverage these platforms, of course.
Okay, Mr. Shah, like you're so passionate about technology, so would you like to add something to that?
You know, I think Samab gets it right. So rather than kind of chasing the trend of the week or the trend of the month, I think in an ecosystem like Nepal, what's important is to focus on the fundamentals, right? When you look at tech-enabled ecosystems anywhere in the world, what you ought to look for, what we all ought to look for, is whether or not the continuum is intact, okay? Are there enough early-stage investors in the ecosystem that can write $1,000 to $10,000 checks, okay? Are there other investors in the ecosystem who will take those companies with $10,000 checks and turn them into $1 million companies that funds like Tim's or Sumandais can invest in, right? Those are the things that we should pay attention to now, not particular sectors. We're too small a country, too small a population to have a sector non-agnostic vehicle, right? What we should be focused on is looking at the ecosystem and how it's evolved. And we should be looking for structures, we should be looking for opportunities, we should be looking for funding vehicles that plug specific gaps in the ecosystem so that the entire ecosystem becomes complete. Whether it's tech-enabled or not is really, I think, secondary. The ecosystem view, however, is paramount.
Okay, leaving a technology side a bit. So let's touch upon the legal and regulation side a bit. So currently, recently, Securities Board of Nepal issued Specialized Investment Act. They also changed a bit of Foreign Investment and Technology Transfer Act and Investment Bill. So, Mr. Joshi, do you think these recent moves by government will be able to build sufficient foundation for venture capital and private equity investors? Do you think industry will really take off from here?
Like I said earlier, this is definitely a welcome move. The fact that this space has now been recognized formally is a very good place to be in. But as far as the regulation that we're talking about, the effectiveness of it and whether it'll be able to spur a growth in this sector is concerned, my answer is kind of mixed, more tilting towards maybe not, because there are so many things in this regulation that need to evolve. There are so many integrations that this regulation need to have with other regulators, for example, the central bank. I mean, there is a provision in the regulation which says that the banks can invest in funds, but then does Nepal Rashtra Bank allow banks to invest in funds set up like this? Similarly, what about taxation? Is it tax neutral? Is a fund tax neutral? Do you pay tax at various levels? And if that's the point, that is what is happening, then where's the incentive for people to invest through funds? And also on the company registrar side of it, there are so many clarities that we need to have, and other regulators need to basically step in and support this regulation to make sure that this is integrated with everything else that affects a particular company or a business. And then the other big piece I wanted to basically point out was the entry barrier as far as the minimum capital required is so low. That is one big piece that I'm personally not happy with, because anybody can get in, and are we really trying to encourage the financial cooperatives to become more fashionable by start doing funds? So I think it needs to evolve quite a bit, but again, it has to start somewhere, and I think it's not a bad place to be in right now.
Okay, Mr. Ghoshal, what are your comments on the recent regulatory changes?
Well, the positives first. I think they made the effort. I think the one significant benefit is the recognition of private equity venture capital as a separate shareholder class to the promoter. So until that point, everybody, if they IPO, everybody's locked in the stock exchange for 3 years. Now there's a separation. The problem is that's only available for local funds. Yes, you can have a foreign investor, I believe, in one of these local funds, but you can't have a foreign fund. There's no registration for people like us domiciled in a different country. And of course, what the country needs to do, given relatively shallow capital markets here, is attract foreign investment. So they really should build on that for, not a full regulation, but some sort of agreement that they can invest. I think, though, the fundamental problems, and we've seen this time and time again with government regulations, is an attempt to guess arbitrarily market variables. So there are the two hottest, when you're raising a fund as a fund manager, the two hotly negotiated variables are what's your management fee and how much does the fund manager need to put into the fund. They can vary anywhere depending on the type of investment, from 0.5% to 3% management fee, and very different. The government has decided that every fund manager will be paid 2% and every fund manager will invest 2%. Now that's fine if you happen to agree with 2%, but any other number will mean you won't set up a fund. So why would the government try to guess two very commercial variables that really just puts off anyone that doesn't happen to agree at 2%? And I think this exposes another kind of difference of intention. When I was asked into the Ministry of Finance to advise, there are only a few private equity funds. A lot of them are on this stage. One of them is next door at the moment. It's not a big market, right? And I was saying that you really want to incentivize. You want private equity. You need large amounts of foreign private equity. Well, incentivize them. Give them a tax break. Make it easier to get licenses for certain things. Give them an incentive. Don't set arbitrary variables. They have set arbitrary variables, and I don't see any incentive. So I think the intention is probably right. There is one good thing, this beginning of the separation of private equity and promoter share, but largely it's not something that would interest us, or I don't know, Sumanji, if you'd consider it. I think it needs some work.
Okay, I also want to check that if our, FDI scenario is improving in Nepal or not. So you've been active since, I think, 2012, 13 in bringing FDI to Nepal. So, do you see any changes happening in the last 5-6 years?
No.
Have things improved?
No.
Okay.
It takes us between 3 and 8 months to bring money in the country.
Mm-hmm.
An FDI license is really just a license to wire money into the country. That's all it is. And that can take many months. That hasn't got any better. We're perhaps better at it because we've been at it for a long time, but I think the country desperately needs to have a level playing field. So Dolma Impact Fund is not very big in international terms. What you need is JP Morgan private equity going to come in. They're not going to set up an office in Kathmandu and get to know how to do these forms for the DOI and the central bank. You need a level playing field. You need a proper automatic route, which I don't believe is what's been unveiled. So no, there's been no improvement. However, if you're here and you're dedicated and the size of the prize is good enough, the entrepreneurs you're investing in are impressive enough, it's all worth it.
Okay, back to Mr. Shah, you've seen various models globally and even locally, the VC and PE investment models. Can you highlight some of the models that foreign investors can adopt to get into Nepal at the moment?
That's a really difficult question for me to answer because I think the answer would be specific on the stage of the ecosystem where the investment would be focused, right? So if we take your standard 2 and 20 model as the gold standard, right? I'd think of at least 10 to 12 derivatives of that model that you could deploy sensibly, responsibly in this market, right? But to tackle your question, to dig into, I guess, the genesis of what you might be getting to more accurately, the size of the fund shouldn't determine where the money goes. The raise shouldn't be determined on an arbitrary number, right? The raise of the fund, given the fund's investment strategy, should focus on specific gaps that are prevalent in the ecosystem. So I'm looking, if you were to ask me what the right amount would be or what the right structure would be, My response would be, it would be a function of where the gap in the ecosystem is, right? So for instance, if we were to look at a structure that does early stage acceleration and seed funding, right? I think at a $20 million raise, a 2.5% and a 20% carry would make sense. And I think you could do a considerable amount of deals here. But the sources of capital, whether commercial, non-commercial, semi-commercial, in that mix would need to be stage appropriate, right? Same thing. Moving on to the next stage of the ecosystem, if you're looking at sort of Series A sort of investments, right? Maybe you need a different structure, because today in Nepal's tech ecosystem, what I see are a lot of viable companies that get the first $10,000 check, and then there's nothing until $100, $150, $200,000 investments, right? So what we need to focus on is structures that make sense to close that gap, that missing middle, if you will, between the first $10,000 and the second $200,000 check. Now, for those sorts of gaps, there's any number of different structures you could take. Now, I hear my colleagues' arguments on the regulatory reforms that are happening, and I appreciate the effort that the government is putting in, no doubt. But you see, the stage, the sector, the sort of environment that I have passion for, I haven't seen any investments in these sort of domains that have waited for regulation to catch up. Okay, the innovation happens, and if ultimately the consumer, the Nepali consumer in the market benefits, if there's a disproportionate disintermediation in the market that benefits Nepali consumers, regulation will always follow. So I'm not so worried about the regulatory environment here. I think the trick is to get the right-sized vehicle with the right sort of incentives, the right portfolio build strategy into the segment of the ecosystem that needs it most.
Okay, the majority of funds that's operating in Nepal at the moment is the source of money is DFI, basically. So do you see any space for commercial money getting in this space from outside?
Again, that's a function of risk reward and appetite, right? So I don't think, even though regulatorily there may be a couple of pit stops we need to pass, I think where the appetite is present, there's never been a hard stop on FDI coming into this country to invest. Okay, we can look at the last 20 years of history and FDI coming into this country, and I wouldn't say that any particular case has been a disaster per se. Okay, so yes, there's ample room for foreign investment of the non-FDI variety, but do we have the quality deal flow in this market to attract that FDI? That's the real question, right? So again, coming back to the analogy I was making earlier, we've got to make sure that funding ecosystem is intact. Right from the early stage $10,000 checks that structures like Sambhav's might write, to the ones that Tim and Sumandai's entities might write. Because if there isn't that quality deal flow in the market, there's nothing for these guys further downstream to invest in. And that's what we need to focus on. So whether it's DFI capital, whether it's commercial capital, whether it's purely non-commercial capital, even if it's the government investing in this sector, we got to look at the gap, figure out where the money's needed, and plug that gap.
Okay, Mr. Siroya, I see you're totally into permanent capital kind of a model that you have adopted for investing.
Yep.
While here, Mr. Ghosh and Mr. Joshi are off the exit side.
Right.
So why that model, and how do you see that model working in your case personally? Actually, I
Okay,
just wanted to
so,
touch upon that side as well.
Sure. So I took this conscious decision for a permanent capital structure because I think different models work for different times, different geographies, different industries, right? I personally feel that VCs or investors, we sort of need to take a step back, right? And ask ourselves, what is this actual industry? I think sometimes we spend a lot of time talking about policies, technicalities, but I think once in a while we need to be true to ourselves and understand that we are here to bet on scalable companies, bet on scalable people, and make money from that, right? So having said that, I think in a market like Nepal, which is so young, this word, private equity, venture capital, is not even a decade old in a market like Nepal. I think the pressure to deploy capital, let's say in the first, 3 to 4 years, and the pressure to exit because you're going to dissolve 10, max 12 years, it makes sense if the LPs are institutional LPs or DFI. It makes sense, right? But I think what companies or people actually need are investors who bring in money but also value to the table, who are not pressurized by the time frame. Because I, as a person, I'm sure if I was doing a fund with the pressure of having to deploy the capital I have in the 4th year or the 5th year, I would probably have to settle for a few bets, right? So I think I took this conscious decision because I want the freedom, right, to be as long with the company as I want to, and exit if I want to, right? The other reason is, my personal opinion is, exits are going to be very difficult, right? How this evolves in the long run, how funds evolve in the long run, I think a lot depends on what kind of returns the first fund makes, right, when it dissolves, right? We haven't seen that yet. So the reason for permanent capital is for that flexibility and to be with the startup or the entrepreneur throughout the journey.
Okay, I'd like to take this moment to welcome our Honorable Minister of Finance, Dr. Yuvraj Khattiwada. So, welcome to the session. Thank you for being with us. Now, building on to the conversation, talking about exit, Mr. Gosher, like, when are you expecting your first exit?
There's a lot of people asking that question, especially my investors. So first of all, I want to comment on, because it's related, on the time factor of funds. I think that's an excellent point. The sort of evergreen permanent finance vehicle is the dream. I wish. I think, though, the reality, once you get your raising from institutional LPs, I mean, you know, if I'm saying I'm raising a fund for Nepal and they're going to say, when are you going to give it back? And I say, well, you know, it's a permanent vehicle. I think they might have some issues. And actually, I kind of like the rigor. I wouldn't choose it, but what we have is typically a 5-year investment period, a 5-year harvesting period or exit period. So we're 4.5 years in. About year 7, the real pressure comes to exit. So I mean, that would be fairly typical of any private equity fund. You're obviously going to build value, and then you're going to look to start to exit. I think one thing that we are seeing a difference in our portfolio. So the companies in Nepal, we have less exit opportunities. For our hydro and solar plants, we do have IPO, but then we're locked in for 3 years as a foreign investor, or as any investor. So that becomes difficult. If we have to therefore IPO within 2 years in order to just get out in time, but there's not many corporate buyers. Because 2 of our tech companies are selling to international markets, their holding companies are abroad, you get many more bids for foreign companies, even if a lot of the employees are here, but you don't have FDI. So to attract a foreign company to buy a company in Nepal is very difficult, because we would have to sell the shares to them through an FDI process that it would take a very long time, and that puts a lot of people off. So I think a way to make that easier, generally make FDI easier, make sure it's a true automatic route, would level the playing field between our Nepal domiciled companies and our foreign domiciled companies. That was a long way of saying we haven't exited anything yet.
Okay, I was wanting to hear a name of the company, but that doesn't seem to happen. Okay, now back to Mr. Joshi. Like, a little personal question as well. Just to highlight the opportunity in the alternative investment space. Like, after 2 decades as a banker, you founded Luxury Bank, 3 consecutive tenure. So, like, why did you shift to alternative investment?
Well, 24 years actually. And I guess that was too long a time to stick to one industry. Plus, banking sector per se has matured to a level where, you know, knowledge was available, market depth was beginning to happen. But at the same time, what I noticed is that our financial system was, like I mentioned earlier, getting to be kind of too heavily skewed towards banking. There was banking and almost nothing else. capital market is shallow, and then there's no private equity at all. There's, so I saw that gap, and I thought that would be an exciting space to be in. And even from banking perspective, what I realized is if the financial system could have good number of private equity players, they would actually complement banks in terms of improving their risk as well, because companies where private equity investors have invested usually have better governance structure, so they are a better risk to be lending to from banks' perspective as well. So, a number of reasons like that actually pushed me to this, and my early experience has been quite, I think I should kind of let you know how we are investing. I started True North as a holding company structure, and we were making direct investments. And then one of the direct investments happened to be One to Watch. One to Watch already has a number of funds under its management, and it's currently in the process of raising a larger fund as well. So we have a hybrid kind of portfolio from True North perspective. I have a bit of what Sambhav has, and also a traditional fund structure. So I've seen the entire spectrum of it, and it's so interesting. It's so fulfilling to be working with these entrepreneurs. You learn so much from them, and let me also link up to the regulation and how it's going to change. I mean, do I welcome the regulation? Yes. Am I excited about it? Not necessarily, like I said. And is it going to stop me from operating in this space? Absolutely not, because I know that we can continue operating in the investment space with or without regulation. If the regulation evolves to a point where we can create better value, welcome. Otherwise, we continue doing what we're doing. So, yeah.
Yeah, there were basically two reasons that I asked you that little personal question. I wanted to touch upon the merchant banking side that's currently there in Nepal, and also the HR side, the human resource side, the human resource that you have to actually, get the investment industry going. So my next question to Mr. Joshi is that, how do you analyze the merchant banks in Nepal? Are they playing good enough role to develop the venture capital and private equity space?
Well, so far, I'm not sure if merchant banks in Nepal have a mandate to operate in the PE/VC space openly enough. They are primarily registrars and advisors and managers of IPOs. But with this new regulation, which allows them to maybe, hopefully, become fund managers as well, probably they can have a role. So I'm not sure if we should evaluate the existing breed of merchant banks from PE/VC lens. Maybe they, you watch them and then let's see what they do into the future. As far as HR goes, to tell you very frankly, I'm learning from the likes of Tim. He brings in this international exposure, and then he's the pioneer fund. I look at what he's doing, how he's doing, and then there's so much learning. Other than that, there isn't enough HR available in investment banking in Nepal. So obviously, the JP Morgan example came up. They're not going to come into Nepal in the current scenario, right? So we need to find ways of building the human capital required for investment banking here itself. And the only way to do it is to join hands with better equipped institutions. DFIs who participate in the funds also help you improve your HR capability, and yeah, I think that's the only way we can progress in terms of HR for next few years.
Okay, I think we still have time and we can take questions as well. So before that, I'd like to give panelists a few minutes to say, a few things about what they feel about the future of venture capital and private equity in Nepal. So starting with Mr. Joshi, what would you like to say to domestic and foreign investors who are in the audience today?
Well, Nepal is ready for business. It's not just a slogan anymore. I believe there is enough energy, enough well-intentioned resolve to basically make sure that economic growth is our agenda and nothing else. We don't have any distractions anymore. So I would welcome and encourage all potential foreign investors to look at Nepal as a early stage investment space. There will be challenges, obviously there are gaps, but then if you enter now, if you take the risk now, the rewards could be tremendous. In a session in the morning, I think somebody pointed out that some of the FDIs that entered about 20 years ago are currently walking away with dividends of 600-700%.
Annually.
So yeah, I guess you take some risk, and I'm sure the reward's going to be tremendous. The reasons why one should invest in Nepal. The only apprehension could perhaps be in terms of the environment, business environment, and let's also address the elephant in the room, which is maybe our capacity to implement an FDI seamlessly. Tim mentioned about the time required to get an FDI approval, which is, he said 3 to 8 months. I think he's being nice. I know of situations where it takes up to 2 years. I mean, those are things we need to address, and we've acknowledged that, and I think that's a good place to start. We know that these are shortcomings, and we will, in all honesty, we will try and address those. The finance minister is right here, and I've read some of his interviews suggesting that yes, that's an area we need to address, and we will work on it. So have faith, look at the opportunities, and come invest in us.
Yeah, Mr. Gosher, from the FDI perspective, so do you have any message for the investors in the audience?
I've got a general message. We've focused a lot on are the recent acts, going to help or not. Actually, the overall message from my last 5 years is one of success. Frustrations here, frustrations there, but we have raised well over $100 million in foreign institutional capital, deployed it. We've invested in 9 companies. Our companies employ over 4,000 people. Although we haven't exited, the revenue and EBITDA growth in the portfolio is fantastic. We're just doing our annual valuation. So I agree with you. It's not that regulations stop us. Perhaps what regulations do is it stops others being on a level playing field to those which are here and understand the market. So the first message is one of success. Second message on HR, I think the key and what we've benefited from is the talent of Nepalis overseas. So if you look in our office, you'll see most of our investment professionals have worked or got their degrees overseas and wanted to come back. I know you're a living example of that next to me. Also for our portfolio companies, we took a majority stake in a pharmaceutical manufacturer. We changed the management team. We looked abroad, found a fantastic Nepali guy working for Big Pharma in India, who moved back to take that. So I think that's key. I also think that's really key in the tech sector, people moving back with those skills. Finally, on government, it may not be systematic, the regulations may not be perfect, but the individuals are very helpful. And there are many instances, I often tell the story of the gentleman in front of us when he was the governor, helping us change a regulation to bring, without which private equity couldn't have come in, simple as that. And there are many instances of that. It may not be systematic, the regulations may not be in place, but there are always people who are helpful.
Mr. Shah, you have any messages for the audience?
Yeah, I have just 2 simple messages. The first one being, everybody's welcome to come, but please come with your eyes wide open. Moderate your expectations, align your appetite with your tolerance with the market opportunities, right? So nobody's saying there's going to be a 100x exit here anytime soon. And the second thought I have is persevere. If you stick around long enough, good things will happen in this market. I'm sure of that.
Okay, Mr. Siraya, as a young entrepreneur yourself, how do you see investment landscape changing over the next decade in Nepal?
If I have to be specific for ventures and startups, I think the biggest change that we'll be seeing soon is the investors and the companies will be exchanging seats. That means I think we will very soon be at an inflection point where ventures, people, entrepreneurs can pick their investors. Right now, the investors, and I being one of them, I think we are lucky we have the liberty to command the deal. We are sort of, nice bullies. Because of the supply demand, because of the deal flows, like Didud said, there are limited deal flows. I think that's going to change. People like me, even though I probably fit under the investor category, I'm working on venture building. I'm working on, like one of you guys mentioned, there is that gap, right? From the first check, from their families and friends, to getting to, the funds that you guys represent. And I understand that you can't go around me taking like super risky bets, right? So that is what I'm trying to, the gap that I'm trying to fill in, right? Taking a comparatively smaller check size, but also a higher risk. So I think the investment scenario, personally for me, it hasn't, like, none of the policies have affected me, the investments I've made, the ventures that I've built. Foreign investment wise as well, I mean, if you're a DFI, funds I think are a great option because you have the local expertise, be it people like, Tim who've come to Nepal, or people like Sumanda and all the funds that are here. I think for DFIs, funds are a great option, but people can get in directly to companies, people can set up or invest in permanent capital investment companies. But moving forward, I think, of course, it's going to grow. The investor base is going to grow, more people are going to come into Nepal. But I think what we need to remind ourselves that, I think Dipta mentioned, innovation will happen. Nothing can stop innovation. Why invest in Nepal in this area is because cheap is the wrong word, but I think you're getting a discounted deal. Because things are comparatively, to build ventures, it's cheaper here. Especially if the ventures are scalable. If the venture is not particularly only for Nepal, I think, you can come in, bring in your expertise, not just money, because people get that today, entrepreneurs get that today. It's not just the money, it's where's the money coming from? Who's going to sit on my board? Who's the guy? What value proposition is he going to bring for my company? How is he going to help my company grow? So I think, if I was on the other side of if I was a potential foreign investor, of course, hydro, energy, they're like amazing, lucrative sectors. But I think smaller companies, scalable companies, I would blindly sign up for, because the multiple return and the enjoyment and the impact this brings, I think, is unmatched by any other sector, any other industry.
Great. We started at 5:40, so I think we still have 10 minutes. We can take two questions from the audience. Gentleman there, please. So can someone give him the mic there? So please, keep your questions very short and sharp. And I request panelists also to keep their answers very short and sharp.
Good evening. My name is Rajan Kandel from UK. Anybody can answer these questions. I just wanted to see, well, in the UK, 99% of business are all small to medium-sized businesses. In Nepal, when I heard about FDI, I only heard about big investment, energy, and other bigger sector. I was just wondering if Nepal could be more open towards bringing more small to medium-sized entrepreneurs to come and start a venture in this country. I was just wondering what the panelists here think, whether the current regulation allows it or not, or what the country should do about it. Thank you.
I think it's your call, I think.
Small, I'm probably not the right person to answer the small ticket size.
If I got the question correct, it's the money that's coming in. I'm trying to understand the question. The money that's coming in, the investment that's coming in, why is it not being focused on scalables, SMEs, smaller companies, and why is it going to, let's say, this now apparently the secondary market, hydros, energy? Is that what the question is?
Yeah, I was just thinking, is the country open enough to welcome medium-sized businesses? I think when I say medium-sized, under 250 employees, a company who employs less than 250 employees. So looking at the most of the developed country, the economy size, you got 99% small to medium-sized company in the UK. So that's what is helping the economy. So in Nepal, when we talk about FDI, we only see big dreams. Why are we not welcoming small to medium-sized companies?
Yeah, I think it's a great question, which I would have loved to ask as well. That's the point. See, like, there needs to be the supply side as well, right? Supply side being not the money supply side, the company, the entrepreneur, that supply side. The large funds that I have the privilege to sit with today on the same panel as well. I think, of course, a lot of money is going into mature sectors as well, but a lot of great deals are happening with, companies like Food Mandu, companies like Sasto Deal, Cloud Factory, Fuse Machines, right? So money is coming in, right? And I think from the impact side and the return side, that would be the priority for everybody, right? Because it's not just, it's about multiple returns. Is Nepal ready? Of course it's ready, right? To bring in money. Does Nepal have enough supply? No, right? Supply side, what will help the supply side? It's companies like us, right? Or investors who are coming in for the long run, who are coming in not just with their hard cash, but also their institutional knowledge, their skills, and their network outside Nepal. That's going to help these companies grow.
Okay, we'll just take one last question. Yeah, there, gentleman there. This will be the last question for today.
Thank you. My name is Ashish Tiwari. I have a question about decision making. As it is, Nepal remains a risky country, and you guys have taken a lot of risk to invest in entrepreneurs. So, the question to Deepta and Sambhav: how do you decide what kind of teams and entrepreneurs to invest in? What goes into your decision making calculus on the team and the entrepreneur side? And to Tim and Suman, the question is: how do you mitigate the execution risk when you make PE investments? Thank you.
So I guess if I were putting my own capital at stake, the thing that I wouldn't do is take technology risk, full stop. Okay, I would invest in companies that are technology enabled, and the qualities that I look for in the founders are the same qualities that Tim or Sumandai or anybody else would look for in a mature investment, right? Do they click? Do they get the idea? Or is there good synergy if there's more than one founder? Are there complementary skill sets? Do they have a team? Can the team execute, right? How are they doing in the market? How are they thinking about themselves relative to the competition that might exist in the market? What are the exit opportunities? How long would I have to hold this company in portfolio to recognize a multiple on my investment? So it's not fundamentally different the way I would look at a tech-enabled investment in the early stage in Nepal versus anywhere else in the world for that matter. The difference, however, is here, I think the one thing one needs to be a little bit cognizant of is more than in other environments, here, I would be betting on the individual, especially in the earliest stages of the funding cycle, because it's really that individual's passion to succeed that'll differentiate that company from the rest of the crowd.
So just quickly to add to that, Ashutosh, I think it's very risky, right? How do I personally try to mitigate the risks that are there? I think I'm more scared of a portfolio company being on the living dead section, right, than actually shutting down or failing. I think shutting down or failing is okay, it's part of the process. It's a win-win situation for everybody, right? You learn from your mistakes, companies will learn from their mistakes. So what I'm really scared of is them entering the living dead section of the portfolio. It's risky, but we're still in this game, but few steps that I've taken or my company's taken to mitigate these risks are, number one, we're all under the same roof, right? Number two, I have a team of advisors, right? I have a corporate team that are experts from different fields. Number three, we meet these companies every single day. We are there for these companies. As an investor who appears in board meetings, even if it's an active investor who would appear in monthly board meetings, it's not enough for these companies because it's too raw, it's too young, right? And most importantly, I think I like to have control of the company, right? Majority control of the company as far as I can, because just the fact that it's so nascent, it's so young, the entrepreneurs are young, I think they need a lot of governance, direction, I think, and we will just feed off their energy that they have. So taking control, meeting them every day, having them on the same roof, and surrounding them with experts, advisors, I think has helped me have a comparatively, I think the companies that I have, they're successful, my failure rate is comparatively low. These are the few steps that I've taken personally.
Okay, there was another question as well to Mr. Ghosh and Mr. Joshi, that how do you mitigate risk from a fund perspective?
Sorry?
So I think he asked question to Mr. Joshi and you as well, that while investing, how do you mitigate your risk?
How do we mitigate risk?
Yeah.
Execution risk.
Execution risk.
A lot of it's about, well, first of all, investing in the right people, credibility, trust. That what there isn't here, I mean, you've got to separate infrastructure finance. So we do infrastructure. So there it's a very different mitigation. You're looking at currency risk and all sorts of things. But we'll talk about private equity, venture capital, corporate finance, if you like. It's all about people. It's also about governance. So what we're now doing is building a team of people. We have been focused very much on environmental and social governance, less so on accounting, HR, and board governance. We're now building those facilities, so before and after we invest in a company where they're lacking in a particular area, we really bring them up to speed. Because we've seen as companies scale, if you don't get that right, it's very, very hard to scale and keep that managed.
The approach we've taken is to basically be partners and also have our investment managers double hat as relationship managers. So these managers basically work with these companies on a daily basis to not only help them improve their governance from all aspects, social, accounting, HR, and all that, but also help them find business, use our own network to sort of generate business for them. And that kind of bond that you build it eventually turns out so strong that they do not look at you as an investor only, somebody who gives you the money and then asks you for reports every quarter. We move beyond that and become a part of their business operation until they need that kind of support. So that's one way we're mitigating our risk, and well, we're learning as we go as well. There are different types of companies and they have different challenges, and we try to use our past experience and the local network that we have to best address those particular challenges.
Yeah, so we're gonna take any more questions. Oh, great views, good and great opinions, and great discussion as well. So things are happening. I should say, though the industry is in a very nascent stage, things are happening. We have new regulation in place, new act, VITA, investment bill, and a little bit of HR experience as well in the industry. And all the funds have their own portfolio companies. We'll be waiting for exit, definitely. I think after the exit, I think this industry will really take its pace. So hence we have now come to the end of this panel discussion. So I would like to thank Nepal Investment Summit 2019, the organizers, for giving us, the Nepalese Young Entrepreneurs Forum, an opportunity to conduct this session. I'd also like to thank all the panelists once again for sharing their knowledge and experience with us. Thank you so much. So with this, I'd like to conclude this session. Thank you so much.
Thank you, Ajay.